Netflix soaring after beating fourth quarter estimates, raising its 2025 revenue forecast, and adding a record nearly 19 million subscribers here. Joining us now, we've got Michael Pachter, who's the Wedbush Securities Managing Director of Equity Research. Good to see you, Michael. Revenue rose 16% from a year ago. Do you actually expect the ad tier to be the primary growth driver for revenue by 2026? I know we have some people in the newsroom, maybe even one at the desk, who have opted into that ad tier as well here. So what are your anticipations, and just walk us into that expectation?
I think that the ad tier was introduced because the company recognized that as they kept raising price, the ad-free tier was already the most expensive streaming service and, was going to remain there. So they wanted to offer a lower priced option. I think that this exceeded their wildest dreams. What it allowed them to do was talk people who quit into trading down to an ad-supported tier. So until yesterday, it was $6.99 plus ads compared to $15.49. They're now raising price to $17.99 for the standard plan, and the ad tier is at $7.99. So less than half as expensive. And the truth is, you churn out a Netflix only because you're not watching it as much as you used to. And I think a lot of people on a stretched budget were trying to balance their spend on Netflix with other streaming services. This allows you to kind of keep Netflix as your core subscription at a pretty low price, whether you watch it or not. It's, it turns into, pennies per day as opposed to, dollars. And truthfully, I think that they're seeing such success. That's why you saw the record numbers. They're now figuring out how to deliver ads to those people and to monetize them better because they're targeting a lot better. So again, churn has all but evaporated. Some people are quitting, but most people are trading down, and that's why they've added something like 80 million ad-supported subs, but they've only added like 40 million overall net subs. That tells you 40 million people didn't churn out, they traded down. It's a big deal.
Michael, when you take a look at some of this momentum that we've been talking about that's behind Netflix right now, a lot of that being attributed to the content, the live events, the sports offerings that they do have. Here's what Netflix co-CEO Ted Sarandos had to say when he was asked about the possibility of full season sports rights. And then, Michael, I want to get your thoughts on the other side.
We are constantly trying to broaden our programming, and live events is one of those things, and sports is part of that. So if there was a path where we could actually make the economics work for both us and the league, we certainly would explore. But right now, we believe that the live events business is where we really want to be.
Curious, Michael, just to get your thoughts, what strategy do you think makes the most sense for Netflix right now as they do approach the future of live events in sports?
Yeah, Ted kept talking. I think he probably got another question a little bit later, but for the first time ever, they sounded intelligent about this, because I thought they've been pretty stupid in the past. They can't compete with Amazon and Alphabet. YouTube TV has Sunday Ticket. Amazon has Thursday Night Football. Those guys are competing for basketball. Netflix will never have enough money to compete with those guys. And Ted said later, we're trying to do special event programming. So Women's FIFA World Cup, once every 4 years, a few weeks of broadcasts, which is really smart, or Christmas Day games, but we're not going to bid on the whole package. And I think that's right, and I think that's smart. When you look at the Sunday Christmas games, the Christmas NFL games they did, they reportedly paid $150 million per game, and they paid for Beyonce. Now, Beyonce turned into lasting content. My wife just watched it again yesterday, so it's still there, it's archived. But it's really not worth it to spend $150 million on something that's 3 hours long and is over. And I'm glad that they're not doing that. The key here is they're just trying to be the place that we all go for everything. They want to have something for everybody. So they have anime, they have documentaries, they have, obviously many foreign language programs. So again, sports is a bad idea. Live events, WWE, good idea. Ad supported, so it drives a lot of ad revenue. It happens frequently enough that people tune in and they don't quit because they're watching the service at least once per month.
Michael, who's the streaming service that you expect to fall off if Netflix continues to entrench itself?
Paramount Plus is kind of a joke. And I say that because they have one amazing creator, Taylor Sheridan, and pretty much nothing else. So, all the shows that you've heard of that are on Paramount Plus were produced by the same guy. I like the guy, I like his shows. I just finished Landman. I highly recommend it. But what happens if he gets poached? They're screwed. So I think that one's in real trouble. I'm not sure that Peacock makes as much sense, now, because Hulu obviously is a competitor with similar content and is better capitalized. Again, Disney is better capitalized. Comcast has that problem that they're losing their core subscribers. People are migrating over to streaming. They're not migrating over to Peacock. So I think those two are in most trouble. Max and Disney Plus are here to stay. And then obviously there's lots of smaller guys.